All right, welcome back everybody. My name's Austin. Today I want to talk about Bitcoin's price as we finish the month of May, going into June, going into July, based on a few key fundamental metrics. This is Bitcoin, and it's all a range, right? Nobody can predict an exact number. It's probabilities. It's looking at trends. For example, just looking at some basic TA, this is the weekly scale, we can see some incredible bullish momentum. Now, knowing that pullbacks are a part of any healthy bull market, we can expect if we pull back, we might fall on this support building around the 20 and the 50 EMAs, both falling around 7,920. This we bounced off of around October of last year. Of course, if we fall past that, we then have the 100-week EMA, right now around 7,300. Of course, you remember we bounced off the 100-week EMA around November, December of last year, 2019. And of course, if all that fails, we have the 200 EMA, right now around $6,000-ish dollars. And look at this, we did close below for 2 weeks. We closed below the 200 EMA when traditional markets tanked back in February and March of this year. And we quickly recovered. And again, if we're looking at the Bitcoin price action into this next month, and if you believe that the buyers are exhausted or maybe the sell pressure is going to be too great, then these are the supports that we may have to fall back on. Of course, we can also consolidate, bring these weekly moving averages up to us. And on the other hand, upside potential is huge right now. We're close. We're very close to pushing past these swing highs of about 10,400. 10,400, 500-ish. So just taking Bitcoin's price action from a TA perspective, these are the levels, to me, that would either signal breakout or break down. But let's dig deeper. Let's look at more, because with Bitcoin, we don't just have TA, we have on-chain fundamentals. This channel will always go that little extra step for you. So let me update you on a few of these price fundamental metrics. We're going to look at realized Bitcoin price, we're going to look at volume-weighted average price, and a few more. So hit the like button and let's start with realized market cap. All this data for the on-chain metrics comes from the company Coinmetrics, but realized market cap, that's the value of all coins in circulation at the price they were last moved. In other words, an approximation of what the entire market paid for their coins. So realized market cap. An example would be, hey, if back 2.5 years ago, when everybody bought near $20,000 per BTC, obviously Bitcoin was overvalued, but the realized market cap shot up to match that. So let's turn a few of these off for now. We'll just focus on realized. And again, it's the value that the coins in circulation last moved. In other words, an approximation of what the entire market paid for their coins. We can see throughout Bitcoin's history, some points the realized market cap was overvalued or undervalued. Back in 2017, 18, 19, we were overvalued once we shot up to 20K. Even though the price dropped for the whole rest of the year, the realized value stayed about the same. And it wasn't until beginning of 2019 that we were undervalued again. Now the price has done a lot since then. Right now, where are we? Well, as of 2 days ago, so this was recently updated 2 days ago. And in fact, Bitcoin's price is around $400 more since then. But the realized value, okay, I was going to say close, but the realized value right now is around 5,680. The last time that the realized cap matched with the actual market cap was around end of March, beginning of April of this year. So the takeaway is, even though Bitcoin's price has been climbing since then, the last 2 months, because the majority of smart money bought their coins when Bitcoin tanked for those couple weeks, when Bitcoin was around 3, 4, 5,000, that's when the coins moved. That, combined with the history, makes the realized price 5,700, round up. And again, I'm not saying that we're necessarily going to hit that price anytime. We don't have to hit that at all. But while the upside for Bitcoin's price is near infinite, we have huge upside. If we're looking at potential support levels, the realized price, where the majority of people bought, is around 5,700. Something to think about. Let's keep watching. Let's keep learning. Next up, a metric that I think is even a little bit more accurate than realized cap is the volume-weighted average price. In other words, an approximation of what the entire market paid for their coins using market price and on-chain volume. Where the realized cap was at the price the coins last moved, the volume-weighted average price, this red line, takes into account the volume on-chain, or the average of where people last bought. So for example, even though the coins last moved at a price of around 5,500, people have bought since, and the volume-weighted average price takes that into account. Again, it is the approximation of what the entire market paid for their coins using the market price and on-chain volume, which is more accurate than just exchange volume that you may see on CoinMarketCap. So let's zoom in a little bit. And right now, as of 2 days ago, the volume-weighted average price was around 7,700. This more indicating than, I guess, the realized market cap of where the average person, when the average person paid for their coins, around 7,700. So whether you take at what price around the majority of coins were last moved, or at what price the majority of people bought their pieces of Bitcoin, to me this is bullish. Because if it happens to sink this low in the next months, man, I'll be scooping up some cheap Satoshis. But it's also nice to know if these are the prices that people were willing to pay for Bitcoin today, and this level of realized support only seems to be increasing, consolidating. The upside potential long-term for me for Bitcoin is huge. But let's keep watching. Let's get specific price prediction for this next month. Actually, if we switch to the monthly chart, for June, July, and August. What are we thinking? To do this, I like this clip of Mark Cuban. Now, this is from 2 days ago. Mark Cuban sharing his perspective on traditional markets, talking about, are we going to see the consumer demand step up coming off of this lockdown? And what he's about to say is for traditional markets, but the uncertainty for consumer demand is prevalent for both Bitcoin and traditional markets. So first, let's watch this.
I'm concerned about both. I think the market is overvalued. I think it's almost impossible to predict where consumer and corporate demand is going to come from. And because of that, it's hard to create a valuation for businesses.
Even in the so-called stay-at-home stocks, Mark, which are so clearly benefiting, whether it's a Netflix or a broadband provider, a Zoom video. I mean, there are a number of stocks which are holding up quite well because of the times we're living in.
Yeah, there's no question. I mean, look, I'm a holder of Netflix and Amazon, so I'm not saying there aren't stocks that'll benefit. They are. But when we look at the market broadly, it's very difficult to project what's going to happen in terms of demand. I mean, business has been fundamentally changed. Consumer consumption has been fundamentally changed. You had the PNC CEO talk about how online purchasing has gone up so significantly within his business. And banking is the most complicated of all processes for consumers to do online. So if we're seeing that there, we're going to see it even more so in other industries.
Interesting. And last piece.
We've got a problem because we're not working from a foundation of data. We're kind of guessing. And from my guess, I think what we're missing is consumer demand. That if businesses were able to fulfill demand, they would find ways to open. But it's not just about physically opening up locations. It's just that consumers don't feel confident to spend money right now. So from my perspective, I'd like to see a stimulus that supports customer demand, consumer demand. I would rather see us give out debit cards, if you will, that say, here's $1,000 that you have to spend within 2 weeks, and preferably locally.
Okay. Like it, support it. So I guess my point in sharing that with you is it's a big question mark whether in these next few months consumer demand will step up. Now, Mark did say that there are certain industries, certain stocks that are reaping the benefits, like Zoom, like Netflix, a sort of a new age on what people value. To me, I can make the argument that a decentralized, non-sovereign, fixed supply, censorship-resistant form of money, people are beginning to warm up to really see that value, especially as the Fed just keeps printing money. So as a holder of Bitcoin, I'm excited at the potential we could see Bitcoin take on macroeconomically. Of course, at the same time, if traditional markets tank, if they do, and maybe they won't, but if they do, usually everything in the short term gets dragged down with it, it's nice to sort of know that the average price people paid for their Bitcoin is not that far off from the price of Bitcoin today. Let me know what you think down below in the comments. That's the video. My name's Austin. See you tomorrow.